Business turnover is one of those terms that is bandied around in the world of business, but it has a lot of confusion attached to it. And in this short video, I'm going to explain to you what business turnover is, how we measure business turnover, why it's still an important measure, and for others, why it's still a vanity metric. Hi folks, welcome to I Hate Numbers, the channel that's there to help improve your financial literacy, make your business more money, reduce your stress and anxiety. What's not to love about that? Let's crack on with the video. Business turnover represents, in monetary terms, in financial value, the goods and services that you sell to your customers. So whether you are a consultant, selling your time, swapping that for money, it's the value of the hours, the days, the projects that you're engaged for. If you're a retailer, that's the value of the goods that you sell to your customers. If you're a manufacturer, that's going to be the value of the goods that you sell on to your wholesaler, the value of the goods that you distribute. Now, how do we actually measure business turnover? Now, the key thing to remember about business turnover is that we measure that. We put a financial number on that based on what actually is being sold. So if a customer rings us up to inquire what we have in stock, inquire about engaging our services here, that's not a sale. That is not recognized as turnover. That merely becomes an inquiry. So once those items are sold on, whether they're physical or non-physical, they have to be measured at the value before we add on VAT or sales taxes, depending where you are in the world. It's before any commission is taken off by all the card companies for processing that transaction. It's before any commissions are paid out to our salespeople. So what we might sometimes see it as is the gross value of that sale. So if I am a retailer selling product for $10 a time, if I sell 3 of those items, that's $30. If I then got to add on the VAT or the sales taxes, the VAT or sales taxes does not become part of my turnover figure. In some circles, by the way, that's called gross turnover. It's really important to remember though, folks, that the value of your turnover is not the same as the money that's in the bank. We'll talk more about that when we say why business turnover is such an important measure. Let's recap what we have so far. So business turnover represents the value in financial terms, whether it's pound notes, dollars, yen, whatever your currency of choice is, it's the value of those goods and services that you sell on to your customer. And the key word is sell. Inquiries don't cut it. Number 2, how do we measure it? We have to measure the value of business turnover before we deduct sales commissions, before we deduct bank charges, before we deduct distribution costs. And it must not include any VAT or sales taxes that we have to charge to our end customer. Now, the third thing is, why is it such an important measure? And it's an important measure in our business for a number of reasons. Firstly, it's a good benchmark. It's an easy number to capture, and it tells us the progress, because ultimately the price we charge our customers for our goods, our services, represents what we feel the real value of that commodity is to that end customer, but also it recoups some of the costs that we have in our business. All businesses will have costs in running their businesses, and we have to make sure that when we charge the customer a price for our goods, that will include a recovery of some of those costs. Thirdly, it gives us a yardstick to measure about how good our credit collection process is. So if I bill a customer today for my time, I might bill them, let's say for argument's sake, £500. I may not get paid money into the bank straight away, and it may be some time. So it gives me a good yardstick and reference point to know how good my credit collection procedures are. In an ideal universe, we don't give people credit, but that is not realistic for hundreds and thousands of businesses around the world. Why is it also important? Well, from that value of turnover, we can calculate what we call profit. We can calculate the margins that we're making, and we can see a measure of success that we have in achieving that. It's easy to communicate to our senior team, our senior management team, to task somebody with a sales target. It's an easy identifiable number, and it's one that's easy to extract assuming you've got good records, assuming you've got good systems that capture those invoices as they go out the door, that captures that value. Now, I've said at the beginning, though, for some, it still represents a vanity metric, and I'll hold my hands up. I still think that ultimately, as a measure, or a good solid measure of financial success, sales turnover is limited. The value of what you sell, your turnover, is a good, easy indicator, but it doesn't actually measure ultimate financial success. Ultimate financial success is based on what profit you generate in your business. So all businesses will have expenses. All businesses will either have paid staff, renting of premises, using facilities of their own properties, electricity, gas, telephony costs, marketing, freelancer costs, distribution costs, you name it. All businesses will have costs. There is no such thing as a zero cost business. And what that means is, if you imagine you've sold £100,000 worth of goods and services over a time period, out of that, you have to take out a slice for all those costs that I've mentioned. There may be more. Out of that also comes taxes that we have to pay over to the respective tax authorities. Whatever's left over belongs to you. That's your profit. Ultimately, profit is a more important direct measure of financial success than sales are. It's quite possible to generate low value ticket items and actually make more profit from those than you will from high value ticket items. We're going to have a discussion about profit in a future video. But for now, let's recap what business turnover represents. First of all, it's the value of the goods and services that you sell. So whether you sell your time for money, whether you sell goods, whether you sell training packages, doesn't matter. There'll be a financial value attached to that. It's important to remember, we measure business turnover based on the figure before commissions, before bank charges, before any costs are taken out of that, and we must exclude VAT and sales taxes from that calculation. It's important because it's a simple number. It's used also for financial story planning, for budgeting, for planning, for giving people incentives, commissions, and helping work out profit. But ultimately, the true measure of financial success, certainly one of them, is profitability and not sales. And that's why, for me, and for many hundreds of thousands of people around the world, sales is ultimately a vanity metrics when you're looking at measuring financial success. Folks, I hope that's been of some value to you. If you need some help measuring, capturing, understanding your turnover, understanding other concepts in your business, then feel free, check the link in at the show notes at the end and give us a call. Failing that, do you know what your business turnover is? See you on the other side next time.